With talks of another potential trade war with China, have you ever wondered how China could potentially fight back economically? What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. The world has been talking about China a lot lately. First it was the protests in Hong Kong, then came this pandemic, now it's potential tariffs. Again. But it's a bigger deal this time because of the economy that we're in. The United States has more debt than ever, and I want to draw some attention to how much of this debt that China owns because it's actually pretty important. The United States national debt is growing at an alarming rate, but that shouldn't be too much of a surprise because, well, the government's been funding a whole bunch of stimulus checks and bailouts and loans. Our United States dollar is backed by faith. Our dollar isn't backed by gold or silver or anything tangible. It's just a piece of paper that we think is very valuable because that's what the government says. We're also very fortunate that the United States dollar is the world's currency, so we can print trillions of dollars and not see our paper dollar value crash immediately. Other countries don't have that luxury. However, that doesn't mean that the United States can just go out and print an unlimited amount of money. I mean, in theory, there's a tipping point where if you print too much money, this dollar will become worthless, but we don't know where that tipping point is. Benji, I'm putting my faith in you. Don't screw this up. It's all just supply and demand. When you pump up the supply of our dollars, the supply of our dollars goes up and the value of each individual dollar comes down, which makes the price of everything around you, your rent, your groceries, your extra guac, go up. That's what inflation is, and that's why the price of everything around you keeps getting more and more expensive. And if you haven't already, inflate that thumbs up button by smashing it below. So as trillions and trillions of dollars are printed, the value of each individual dollar that we have comes down, but we're still okay because the United States dollar is the world's currency, so lots of people still have faith in the United States dollar. But there's no guarantee that it will always be that way. Like I said before, the United States national debt is growing faster than ever, but have you ever wondered, who does the United States owe money to? Like, who owns our debt? If you wanted to buy a home, you might walk into Chase Bank and ask for a mortgage, and then when you get that mortgage to buy a home, Chase Bank will own your debt, and sometimes they'll actually own your house too, depending on where you live. It's not so simple when it comes to the government. As of May 2020, the United States has around $24 trillion worth of national debt. A fourth of that is owned by the United States itself. I'll explain what that means in just a second, but the rest of this debt is owned by other people. These other people include the Federal Reserve Bank, institutional investors and regular people that lend money to the government by buying treasury bonds, and foreign governments like China. Are you telling me China owns the United States? Not exactly, but hold that thought. The United States government owns some of its own debt because the government is broken up into different divisions, and some of these divisions generate more money than they actually pay out. Like the retirement division used to generate more revenue than they would actually pay out, and they would take this extra cash and instead of saving it, they would invest this extra cash by lending it back to the government. But back to the foreign governments that own our debt. China and Japan are the big two countries that own the most of our United States national debt, and they own trillions of dollars worth of our United States national debt. At first glance, you might think, okay, what's the big deal? China lends us money, we invest this money back into our country, and then we pay this money back to China plus a little bit of interest. Well, just like everything else, nobody sees the financial problems when times are good. But when the tide goes out, that's when the financial problems start to emerge. The tide hasn't gone out yet, but you need to know what's going on, that way you can make smart decisions with your money. Think of it this way, Warren Buffett has a lot of money. And if he goes out and he says something like, I'm gonna sell or I sold all my airline stocks, this is not good for airline companies. For one, when Warren Buffett invests his money, he buys a lot of shares. So if he sells all of his stock, that means he's going to be selling a lot of shares, and that brings the price of this company or stock down. The price of a stock is determined by supply and demand. When you have more buyers than sellers, the price of a stock goes up. When you have more sellers than buyers, the price of a stock comes down. So if Warren Buffett sells millions of shares of a company, now all of a sudden you have way more sellers than buyers, and this will usually bring the price of this stock down. And second, this downward pressure on the price of the stock can bring more bad press, which could encourage more people to sell their stock, which would bring the stock down even more. And if this company was already hurting, well, now things got a whole lot worse. So if Warren Buffett sells shares of a company when they're doing really good, it's not as big of a deal because they're doing good and they can absorb that pain. But if this company's hurting, then the pain and loss kind of compounds. The reason I'm saying this is because, again, China owns a whole lot of our United States national debt, which is no problem when things are good. But that comes with a big risk. Oh man, I never liked risk. The risk is if China wanted to hurt the United States economy, they could suddenly sell all of the United States debt and unload it to the market. And this would kind of be like an economic attack to the United States. And that could start kind of like an economic war. What you talking about, Jasperito? Let me explain what I mean by going back in time to 2008. Before the whole 2008 crash, Russia and China had loaned a ton of money to Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac were government-sponsored entities whose job was to support our housing market. Well, when the whole 2008 real estate crash happened, Fannie Mae and Freddie Mac were bleeding cash and the government was losing a lot of money trying to support them. Well, that's when Russia had the idea to kick the United States when it was down. During the 2008 recession, the United States was already hurting. And that's when reports came out that Russia went to China and tried to convince China to sell all of their Fannie Mae and Freddie Mac loans to hurt the United States economy even more. Essentially, this would have forced the United States government to go into even more debt to support Fannie Mae and Freddie Mac. This would have been a huge blow to the United States economy when we were already hurting, but China said no. Well, now in 2020, China is one of the biggest holders of our United States national debt, and if they wanted to hurt the United States economy, they could potentially try to unload or sell all of this United States debt. This would devalue our United States debt, it would hurt the United States dollar, and it would hurt our economy. The reason this is a concern now is because, well, the United States is threatening sanctions on China because of this whole pandemic, and there are talks of another potential trade war starting with the United States threatening tariffs on China. Essentially, these are ways for the United States to tax China and hurt their economy by making it harder for China to do business with the United States, and it's a way to encourage things to be made in the United States. Now, what you should understand is this isn't the first time that the United States has ever been worried about China potentially unloading all of the United States loans. The United States and China had a similar trade war back in 2018 for different reasons, obviously, but then people were worried about China unloading all of the United States treasuries then too. When that trade war happened in 2018, the stock market suffered and people were worried about a potential recession. But the difference between now and then is back in 2018, the United States economy was still very strong. Now in 2020, our economy is shut down. That's why this foreign debt is so much riskier now. So now, with the recession pretty much guaranteed and talks of another potential trade war starting, this is definitely something you want to keep your eye on. By the way, if you are looking for an easy way to stay up to date on the top finance and business news, that way you can make smart decisions with your money, well, that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet by emailing you this top finance and business news every Monday through Friday at 7:30 a.m. Eastern Standard Time. Our finance and business newsletter is completely free, and you can subscribe by clicking the link up here or by clicking the link in the description below. So what does this mean? Well, it's hard to predict because there are so many unknown variables out there. Like, we don't know what our economy is going to look like in 6 months, let alone 60 days. And we don't know what's going to happen with this trade war, if anything. But I'm going to do my best to keep you updated on our YouTube channel. And if you haven't subscribed to our newsletter yet, you should definitely do it. And I got the link in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about this national debt bubble that we're building right now, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.